We got some pretty sizable shifting in the real estate market in Tampa Bay, particularly with purchase contracts falling 10% month over month. I'm Sean Reddy of the Keller Williams Reddy Group, and this is the Tampa Bay market in a minute. We're talking September numbers that are hot off the presses, comparing it to August of 2023, and also comparing it to September of 2022 so we can see those year over year changes, and then just kind of wrapping it up with how to navigate this market. So as I mentioned, purchase contracts fell 10% month over month, going from over 3,400 in August to just over 3,100 in September. This measures Hillsborough and Pinellas counties combined. Some of the other big changes, we saw 14% jump in available homes. That is a measure on the first of each month and then just comparing it. So 1st of September, there were shade under 7,000 homes available. 1st of October, it was almost 8,000 homes available. So less purchase activity, more inventory sitting. We did see a 4% jump. I'm not going to call that a jump. A 4% increase in new listings going from 4,200 to almost 4,400. The homes that did go under contract are taking longer. Month over month, we saw a 17% increase in average days on market and 31% increase in median days on market, going from 16 days to 21 days. Talked about new listings, closed sales down 3%, 32.5 to 31.5. Not a sizable shift there, yet something to keep an eye on in case that trend does continue. Now, pricing. Here's the thing. The average selling price in September was 1% higher than in August. So while we're seeing more supply and less demand, we did see the average home that did sell, this measures only the homes that closed in each month, of course, go up by 1%. The median price remained the same at $410,000. Let's compare that year over year. So looking at September of last year versus September of this year, the average and median days on market, not too different from each other. Last year, the average was 39. This year, the average 42. Last year, the median was 24. This year, the median is 21. Now, that is a 12.5% decrease in median days on market, yet it's a small number going from 24 to 21, so I'm not going to put too much stock into that. New listings, this one's rather sizable. Actually, I'm going to go to the one that jumps right off the page at me. Purchase contracts down 31%. We already talked about the diminishing demand, yet last September, almost 4,500 homes went under contract between Hillsborough and Pinellas counties. This year, a shade over 3,100. So that's a sizable and almost seismic drop in purchase contracts. That caused available homes to be up 7%. Last year, on the 1st of October, there were under 7,500 homes. This year, almost 8,000. We didn't talk about new listings. Check this out. So last year, 3,647 homes came to market in September. This year, 4,362 homes came to market in September. That is good for a 19.6% increase. So we always hear on mainstream media that nobody's listing their home because they don't want to ditch their rate. Well, 20% more people did this year compared to September last year. So that's something to keep in mind. As listings increase and demand decreases, we're going to start seeing more of a move towards buyer's market territory. Okay, closed sales. Let's go to closed sales next. Closed sales actually went up 5.8%. So not going to put a whole lot of stock into that because closed sales in September went under contract in August and even in July. We saw different market conditions in July and August than we did in September. That has to do with the length of time, the duration that the mortgage rates have been over 7% is now approaching about 3 months. Pricing. The average price in September, now this measures what closed in September of last year versus what closed in September of this year. It doesn't say, every home value is up this, yet the average selling price is up 11.1%. Median selling price up 6.5%. So last year, the median price was $385. This year, it's $410. So there's some mixed data there for sure. And lastly, the sold price to list price ratio, it's actually exactly the same at about 99%. So what do you do with all this data? Obviously, homes are selling. We're never going to hit a market of zero. And yet I look at I look at new purchase contracts down 31% year over year and down 10% month over month. It's kind of a warning sign almost. So we have to see how this thing plays out. There's three types of people in the market, right? Either they are buying a home independent of anything else, or selling a home independent of anything else, or they're selling a home to buy a home. The people that are selling a home to buy a home really shouldn't matter because you're just doing an equity swap. But if you're selling a home or independently, or if you're buying a home independently, there's opportunities for each. You just have to kind of pick your spots here. This again is a macro level look at 2-county area. So if you really want to break it down, we can do it by town, we can do it by suburb, we can do it by subdivision, we can do it by neighborhood, we can do it by street, or your particular home, because not all markets are equal, even in this tiny, relatively small 2-county area. So let us know. Happy to break it down for you. Hope this is valuable to you. I imagine it is if you're still watching 6+ minutes later. This is Tampa Bay Market in a Minute, 6-minute edition. And I'm Sean Reddy, Keller Williams Reddy Group. Really appreciate you watching. And if you do like this, make sure to subscribe, hit the notification bell. We would certainly appreciate it. And we'll see you next month.